Good morning, guys. How are we all doing? Happy Monday, everybody. Welcome to the welcome to the new trading week. Obviously, it is a holiday in the US, and also every day is a trading day for Bitcoin. So I guess in the UK, we is a new trading week. But yeah, hope you guys have all had a great weekend. This is our Bitcoin morning update, so we shall go straight over to those Bitcoin 4-hour charts. So as we can see, we are attempting to get back above this mid-range level resistance stroke support area. Just get above this area. I mean, very briefly, we are just getting this nice little bounce in the stock market in the S&P futures, which are trying to get back above there also. Resistance area here, old support, new resistance, and obviously if they get up there, maintain above there, then yeah, Bitcoin should get above here and maintain above there. So it's almost as simple as that. It is almost that simple. We've got to keep an eye on these stock markets. Obviously we have got just the it's just obviously the whole Ukraine Russia thing that is pretty much the driver for markets at the moment. If that is to ease off, then we should get a pretty sharp de-escalation in commodity prices, of which obviously Europe is struggling with this morning's producer prices index number coming in at 25% year on year. 25%. X out energy though, I think it was like 12%, but 12% is still a massive number. But you can't X out energy because it is there and it is an important cost, and obviously it's getting driven up by not only just inflation itself, also by ESG, and then also by potential armed conflict. So yeah, as much as it's nice to say X out energy, it's only 12%. 12% is a ridiculous number anyway. But 25% is an unfathomably high year-over-year headline number. So yeah, inflation, energy prices. But yeah, anyway, back to what we're looking at. Stock market is looking to get back above here, but like I said, it's a holiday in the US, so maybe we won't get any real direction unless obviously there's just some pronounced de-escalation. Apparently Putin is just like moving things about to make it look like they're withdrawing, but let's see. DXY easing off a little bit into our support zone, but then obviously having a bounce from there. 10-year still easing off a little bit here as well, which is relatively good. It is good to see the 10-year ease off and also the dollar index ease off, because it kind of shows easing off in the 10-year isn't a risk off. It's more a decrease in inflation, because obviously DXY is indicating potential risk on. Although obviously DXY is going to get hit if the Eurozone is getting hit with massive inflation numbers, because that means Eurozone is then going to have to potentially tighten more than they are, and obviously currencies are relative trades, so that would then obviously strengthen the euro up more than against the dollar, which is basically what the DXY is. Practically is the euro US dollar plus a few a bit of Swiss francs and yens and pounds and that all that cool stuff. Let's look at the Ethereum Satoshi pairing. Is making ground off this support area. Kind of got to get quite a bit higher before it can look like it's going to make a move up. But the larger picture is looking like this could be a bottom, like we are potentially putting in a bottom here. As we got these low, we'll test these lows, we push back up. Ultimately, once we get above here, we should go pretty bullish. But you can see we've been a pretty long downward trend, and this is starting to look like it could be a bottom. So yeah, that would be good to see a turnaround. Maybe we'll get that decent bounce for BTC up towards anywhere into the 50,000s. Probably even if we are going to come down lower and not take out this high, I do suspect driving the market into this is the sweet spot, I think, because if you're wanting to distribute into the faces of the FOMO buyers, they should start FOMO buying basically above I would say about 52.5, 53,000, so between this area and 58,500. once we clear these levels is when people start. So there'll potentially be a lot of buying you can sell into here, and then we will see then whether there's enough buying to basically break us above 58, in which case we'll probably go onwards and upwards towards getting towards 100k, or rejected, come back down, and then it would look pretty, it would look well, I say it would look pretty dire. We still would potentially just be in a contracting volatility sideways range, so not the worst thing, but obviously to put in like a macro high there and start to come down again, we'll obviously be having to find the bottom, which could obviously then be lower. So yeah, all to play for there. The Ethereum USD pairing also in a bit of no man's land here, as you can see. Not too much we can really draw horizontal wise. We just need to get a back above 2900. What's that? Get it back above 2900 or so. Needs to sneeze again. Sneezes come in pairs, don't they? This second one doesn't. I don't think it wants to come out. But yeah, I mean, it's still, this is obviously not looking that great. If we do expand this out, if we do get back above 2900 from here, we could look like we are putting a nice bottom, the same as the Satoshi pairing. But obviously lots of work to do, basically lots of work to do. Gold still hanging around up there, as we can see, interestingly. So maybe it is obviously this is reacting off the Ukraine stuff, but also maybe they are finally having to have a reprice upwards just due to the inflation. Oil as well, just hanging around up there. Unless literally an actual invasion occurs, I think this will struggle to push up higher. And as things de-escalate, I do think we will be looking at a pullback, basically into the 70 handles, I would have thought. Because obviously this is a quite sharp move up, but I think that to the downside it will be quite aggressive, and people will be trying to buy it, and then they'll get squeezed, and more people buy it and they'll get squeezed. And we could even see, I mean, realistically we could actually see a just tick into a 60 handle. But then I think when we do bounce from wherever this pulls down to, it would be a pretty aggressive bounce, and then it will be a case of this will be an important level, this $85 area, I think, to get back above. But we shall see how that plays out. Other than that, not too much really to look at. We'll look at those stochastics. 4 hour can potentially give us some nice upward momentum here. So can that obviously get us above and maintain this level? It most certainly has the ability to do so. 10 hour looking to turn back up from a low level as well, or is basically just tick back up from a low level. 12 hour exactly the same also, so we could get 10 and 12 hour move in again. Daily diving, obviously getting quite low here. 10 and 12 hour turn up. If we do make that progression above, say, 39,000, 40,000, then this daily will ultimately turn back up. 2 day though, lots of room to run down. 3 day got a significant turnover in it, but not obviously turning down as of yet. 5 day not looking too bad. Weekly obviously from a very low level turned up, and then bi-weekly and monthly obviously still coming down. So overall, if we get this 10 hour, 12 hour, 4 hour drive, well, 4 hour driving up the 10 and 12 hour into the daily turning up, then yeah, decent bounce time. Then we could, like I said, this could be a low, and then realistically we are looking anywhere into the 50,000s for obviously a potential reversal back down, or a break above, and yeah, onwards and upwards to bigger and better things. So there we go, guys. Remember, this is not a financial advice. I'm not a financial advisor. Thank you for listening, and I shall speak to you guys soon.